Hello everyone, I am Pratap here. We are at part 3 of lesson 18. In this lesson, we will discuss the odd enhances parameter price direction plus curve with the special scenario all-time high and all-time low. And this lesson is having dependency on the earlier lessons. In case if this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action course. And all the training lessons can be accessible from the playlist Supply Demand Zone Price Action course at our NeoStock YouTube channel. I have also provided the link to this playlist in this YouTube video description. You click the link, you will directly get into this page and then scroll down to the bottom of the page, and here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills. I have also provided the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel. It will be useful to you. Each time when we release a new video, we will provide an update in the channel. Now let us get into our main topic, the practicals along with the special scenario, all-time high, all-time low scenarios for price direction and curve. And if you did not complete price direction and decision making table in lesson 14 and 15, if I am not wrong, it is very difficult for you to understand this odd enhances parameter, because I have already observed some of the members did not complete these topics, but directly they are attending lesson 18. Don't do that, because all these topics are interrelated and they have dependency on the earlier lessons. If you would have already learned decision making table for bullish trade setup and bearish trade setup, you are already aware of these scenarios. And previously in part 1 of lesson 18, we discussed the price direction and curve scenario when both HTF and ITF demand and supply zones are available. But when market is at all-time high, most of the time our HTF zone and ITF zones may not be having either supply zones. If it is all-time low scenario, they may not be having demand zones. So in that scenario, how we need to define the score? So for that, I have given all the scenarios. Let us assume HTF is not having a supply zone because it is at all-time high, but ITF is having both demand zone as well as supply zone. If that is the case, your LTF demand zone curve, it is having only either low on the curve or equilibrium. At all-time high, there won't be any high on the curve. So in that case, we will be giving a excellent, we will be considering it as an excellent, and we will give the score 2. Suppose prices are moving from all-time high to your HTF demand zone. That means we are planning to trade against the primary price direction, that is HTF price direction. But ITF price direction should support. That's why in ITF, prices are moving from demand zone to the supply zone. We will consider that scenario as a good and we will give the score 1. You may ask a question, what about even in ITF also prices are moving from supply zone to the demand zone? In that scenario, we will give the score 0. That is what I described at the end of this slide. And we have another scenario. What is another scenario? Both HTF and ITF, they are having only demand zones. They don't have supply zones. That means both HTF and ITF are having only all-time high demand zones. In that scenario, let us assume in HTF, prices are moving from demand zone to all-time high. ITF also prices are moving from demand zone to all-time high. Then in LTF, where we need to take the trade? In LTF, we have only 2 curves because it is all-time high scenario. We have only low on the curve or equilibrium. Wherever it is there, your demand zone, LTF demand zone, you can consider it as an excellent and you can give the score 2. And in this scenario, Let us look into an example in the practical session. So we don't have HTF supply zone, and also we don't have ITF supply zone. Let us look into that example. And the next scenario, prices are moving from all-time high to HTF demand zone. But ITF prices are moving from demand zone to all-time high. In that scenario, you have to consider your LTF demand zone, whether it is in low on curve or equilibrium, you have to consider it as only good, and you have to give the score 1, because we are trading against the primary price direction. Actually, in HTF, price is supposed to move from demand zone to all-time high, but against that we are trading. In that case, you have to give the score 1. Why we are trading against that? Because ITF is still supporting us. In ITF, prices are moving from demand zone to all-time high. Probably ITF prices reach to your ITF zone, and ITF zone pending orders are pushing the prices up. In that case, you can plan your trade in case if there is any price retracement to your LTF demand zone. Exactly the same way, the reverse is all-time low scenarios. If you understand all-time high, easily you will understand all-time low. I will not be giving any explanation. Just let me show you the rules. This is the first rule for all-time low scenarios. This is the second rule. These two rules are exactly same as the first two rules we discussed for demand zone, but it is quite reverse because they are at all-time low, supply zone to all-time low. See, first four rules are for demand zone related long trades, and the next four rules are supply zone related short trades. So please go through these rules. If you already complete your price direction and decision making table for bullish trade setup and bearish trade setup, you will be easily understand these rules. If you did not complete those lessons, I request you first complete those lessons and then only you try to understand these rules. Because in that lesson clearly we discussed all these scenarios. The only thing we added here is, in addition, we mixed with the curve. We combined both. Even there also I explained about the curve. So you'll understand. First, please complete those lessons in case if you did not. Okay, now I'm going to let us get into a practical session. I'm taking this scenario. HTF demand zone to all-time high, prices are moving. ITF demand zone to all-time high, prices are moving. So that means HTF price direction and ITF price direction both are in our favor. When both are in our favor, whether your demand zone is, which demand zone? LTF demand zone, lower time frame. That is our entry time frame. Our entry time frame demand zone, whether it is at low on the curve or it is at equilibrium, it doesn't matter. Wherever it is, we get a score 2, maximum score. So look into the chart, Astral. So we are planning a trade at a daily time frame. This is a MIT trade, monthly income trade. In MIT, HTF time frame is monthly, ITF time frame is weekly, and LTF time frame is daily. That means in daily we are going to plan our trade. So first you let us draw the zones one by one from monthly time frame. First let us go to the monthly. In monthly, we have a drop, two base candles and a rally candle. You may ask, why can't we draw here? We have a leg out candle, we have a leg in candle. But look into the base candles. You have 7 base candles. 1, 2, 3, 4, 5, 6, 7. So this is a medium size leg candle. This is a medium size base candle. And these two are small base candles. Again, this is a medium size. And again, small base candles. So you can't draw. This is not a valid zone. So that is the reason why we are drawing drop, two base candles and rally. This is our monthly demand zone. But is it having all-time high? No, it is not having all-time high. Sorry. Is it having a supply zone? No, it is not having supply zone. That's why this demand zone is a all-time high demand zone. So let us mark all-time high. In the template, I am adding this as a all-time high. So this is a all-time high. The text is also added here. And all-time high from distal line to this all-time high, we divide into two equal parts. Instead of three equal parts, we'll divide into two equal parts. So let us draw this info line from the distal line of this till the all-time high. You have drawn this info line. So what is the value? This is around 840, approximately 840. Let us divide 840 into 2. 840 divided by 2, you are getting 420. So for your distal line, what is distal line? What is the value of this? So it is around say 1300, close to, approximately I'm calculating. So plus 1300. So at around 1720, you need to draw a horizontal line. So let us draw a horizontal line. 1720. I just drawn, double click on this line. In the coordinates, you just copy the value, paste the value. While paste, it is giving dot, just delete that. 1720, click OK. So automatically this line is adjusted. So the one below is low on the curve, above is equilibrium. For your easy identification, let us give the names. Initially you practice, later on you know, once you get experience, just with your visual representation, easily you will be in a position to tell. But initially, so low on the curve, and another one is equilibrium. This is the area equilibrium. Okay, let me adjust. Okay. Okay, this is, we identified the curve. Now what you need to identify? You need to identify ITF zones. So let me, what is ITF weekly? So let me go to the weekly time frame. In the weekly time frame, you have to identify weekly zones. So here you have ERC candle. This is the ERC candle can be used as a leg-in point of view. This is a failed ERC candle. Then you have a base candle. Then you have a rally candle. This is the recently created one. You have a rally candle, medium size drop candle. Again, you have a rally candle, rally candle. So that means you have continuously leg candles are there. First leg, second, third, four leg candles. Out of these four leg candles, one is a drop, remaining are rally. But here we have a base candle. So that's why we are drawing a zone. This is the weekly zone. So this is weekly demand zone. Okay, now how prices are traveling? From weekly demand zone, prices are traveling towards the all-time high. What about monthly? Monthly also prices are traveling. Let me go to the monthly. See, monthly also prices are traveling from monthly demand zone to all-time high. Weekly also same thing you have observed. prices are traveling from weekly demand zone to all-time high. That means this price direction will be favorable to long trades. The reason is in a lower time frame, if prices retraced back to its demand zone, definitely some demand zone will be there somewhere in between. If prices retraces back to the demand zone, you can plan a trade because your weekly price direction is supporting and also your monthly price direction also supporting. This is weekly price direction, this is monthly. Both are prices traveling from these demand zones towards the all-time high. So that's why in between any swings at the lower time frames will give you good long trades. This is the point you have to understand. Where you can plan in the equilibrium or even you can plan in the low on the curve. Wherever it is, it doesn't matter. Now let's find where is our demand zone. So changing the time frame to daily. Look into this. We are at equilibrium. This is equilibrium area. And this is low on the curve area. We are in the equilibrium. And in the equilibrium, we have a demand zone here. We have a drop candle, base candle, and a rally candle. This is on the daily time frame. So let us draw a daily demand zone. This is the daily demand zone. Let me change the color. So daily demand zone is at the equilibrium. It is at the equilibrium. So if prices retraces back to this daily demand zone, definitely we can plan a trade. So that is an advantage for us. And also we have a supply zone is also there. We have a daily supply zone. We have a base candle here, medium size candle. And this is a large candle, but ERC, failed ERC candle, we can use as a leg-in. So that way you can draw a zone. This is supply zone, daily supply zone. Only daily time frame we identified a supply zone, but weekly and monthly we didn't have a supply zones. That's why we call them as a all-time high monthly demand zone and all-time high weekly demand zone. But this is not a all-time high zone in daily, the demand zone, because already a supply zone is there near to the all-time high. If the supply zone pushes the prices till this daily demand zone, you can plan the trade. But when we want to plan the trade, is odds enhancer score is supporting us or not? At least minimum we need 12, right? So let us identify the score. We are already having a template. So what is the first parameter? First we in the template, first we will enter the stock code. So what is the stock code? Astral. I'm just copying and pasting here. And also you should identify your LTF zone. What is your LTF zone? You have to specify even time frame also. This is a daily demand zone. So I have typed daily DZ, daily demand zone. Very good. Next, what else you have to do? Now you need to find the score for all these odd enhancer parameters. What is the first odd enhancers parameter? Zone achievement. Does it have any zone achievement, this particular demand zone? Might be here, see here, we have a drop, two base candles and a drop candle. See here. This is a daily supply zone. This daily supply zone is violated. By violating this daily supply zone, it gets a zone achievement. Not only here, here one more is also there, here also there. So this demand zone already violated two supply zones. See, this is a rally candle, base candle, and a drop candle. Even here also we have a drop candle, base candle, and a drop candle. Another. All these zones, maybe some of these zones are LOTL zones, but anyway, all these zones are violated completely. Because all these zones are violated completely, even if one zone is violated, that is more than enough. It gets the zone achievement. If what kind of zone achievement it is having? It is having a violated opposing zone. Violated opposing zone will get a score 2. So let's enter the score 2 here. So what is the next one? Base candle count. How many base candles we have in this demand zone? We have only one base candle is there in this demand zone. Between 1 and 3 we can give a score 2. So we are giving the score 2 here. So what is the next one? Zone freshness. Is this demand zone is tested? No, it is a fresh zone. Prices haven't entered into this. If this is going to be the first time, this is going to be a good trade for us. So that's why we are giving freshness. If it is a fresh zone, that means it is not a tested zone. We have to give the maximum score. So it is getting 2. Next one is RR, risk reward. What is the risk reward? From this demand zone till this supply zone, what could be the risk? So here let us use the long position for calculating, because now we are going for a long trade. Selecting the long position, see, adjust the values here. And your entry point should be somewhere here, near to the zone. And this will be your target. What is RR? It is having 2.95. That means 3, close to 3. So we have 1:3 RR. If 1:3 RR, how much a score you have to give? If it is 1:5, we have to give maximum score. If it is 1:3, you have to give average score. That is good. Good, not average. It is a good score. That is 1. You have to give 1. So you will be getting 1. And if you are an experienced person, I told you between 1:2.5 until 1:4, you can give the score 1. If it is above 1:4, you can give the score 2. That is what I already suggested earlier. Even if you are a beginner, this is almost close to 1:3. 2.95, if you round off, it is going to be 3. So you can give the score 1. So it is getting RR1. What about zone strength? Now let me delete this. So what is this? A drop base rally with a pro gap. There is a pro gap. So a zone having pro gap is an excellent zone. We have to give maximum score. Even if there is no pro gap, let us assume. Look into this candle. This is a highly explosive candle. This is much larger than the large candles. That way also you give excellent score. So whatever it is, either way it supports. So we are giving excellent because it is having the pro gap. If not, even it is a highly explosive, we are giving the maximum score 2. And is this zone having EMA 20 confluence? Daily 20 confluence is not there because prices went beyond that. Because prices already crossed this, the daily confluence is not there, but ITF confluence might be there, right? Go to the ITF time frame. What is ITF weekly? See, this zone is having weekly confluence. See the weekly EMA value? Just almost about to touch this zone. Just about, small buffer you can add. So this zone is having EMA confluence, weekly EMA confluence. If there is a overextension completes for weekly, by the time it reaches to this zone. So that way you can give priority. What about monthly? This is the demand zone is not having monthly, but weekly zone is having monthly EMA confluence. But at present we are focusing on the daily demand zone. So daily demand zone is having a weekly EMA confluence. Because it is having EMA confluence, see, it can have daily EMA confluence, it can have weekly EMA confluence, or even it can have monthly EMA confluence. If any one of these EMA confluence it is having, you can consider that zone is having EMA confluence and you can give the score 1. Because maximum score for EMA confluence is 1. So let us go to daily time frame. It is having EMA confluence, weekly EMA confluence. Our daily demand zone is having weekly EMA confluence, so we are giving the value 1. Next, the 7th one is a trend. What is the current trend? So current trend always you need to look into weekly time frame. See, because this is a all-time high stock and already weekly all the supply zones are violated. See here we have a rally, base, drop. This is violated. All the supply zones are violated. Obviously, the trend on the weekly time frame is uptrend. So if it is an uptrend for demand zone, uptrend with demand zone always gets maximum score. Downtrend with supply zone gets the maximum score. Now we are doing a calculation for the demand zone. So that is the reason why we are giving a score 2. Because our LTF zone is daily demand zone. Okay, our daily demand zone is having uptrend at a weekly time frame. So maximum score 2 we got. If it is sideways, we will get 1. But it is uptrend, we get 2. If it is supply zone, we will give 0. Uptrend in supply zones, we will get 0. That point you have to understand. Okay, anyway, we are doing demand zone, we have given 2. And the last one is a price direction plus curve. So this is what we discussed today. So here, monthly price direction is from monthly demand zone to all-time high. Weekly price direction is weekly demand zone to all-time high. What is the meaning of all-time high? It is indicates moving towards the all-time means indicating the currently price is moving towards the bullish direction. So in bullish direction, obviously you should plan long trades. If it is a bearish direction, you have to plan the short trades. See, direction always indicates bullishness or bearishness in the market. Simple rule. In bullish, we have to plan long trades. In bearish, we have to plan short trades. But this bullishness or bearishness, we are looking from the monthly time frame point of view and also weekly time frame point of view. Monthly time frame point of view, it is saying the market is bullishness based on the price direction. And similarly, ITF time frame also it is showing bullishness because both are showing they are in favor. Price direction in HTF and ITF are in our favor. In both are in our favor. You can plan your trade in equilibrium or even you can plan in trade in low on the curve or even you can plan the trade in high on the curve also. But this is all-time high. You won't be having high on the curve. You have only two, low on curve, equilibrium. And in low on curve or equilibrium, you will get the maximum score. So our demand zone in the equilibrium, but still the score is maximum because of the favor of price direction in HTF as well as ITF. In both we are in favor. So we are giving 2. That is what we have discussed here. Look into the third one here. HTF demand zone to all-time high. ITF demand zone is also moving towards the all-time high, the price direction. That means bullishness. They're moving towards the all-time high indicates bullishness in the market. Here also bullish in the market. So when there is a bullish, so obviously we should plan long trades. And curve also matters. Here curve is low on the curve, equilibrium we will be getting to. All-time high scenarios, we have only two curves, low on curve or equilibrium. Wherever it is, 2. If it is against the HTF direction, the score will be reduced to 1. But we are not against. At present, monthly is bullish and weekly also bullish. The price direction I am explaining in terms of bullish and bearish. If all-time high to demand zone, if prices are moving means prices are going down, falling down in monthly. That means bearish. But demand zone, ITF time frame moving from demand zone to all-time high. That means bullish. So at the time, we always trade in favor of ITF. That's why trade we can take, but score is reduced to 1. That is what the difference between these two. Now currently our stock is supporting the first one out of these two. Actually, this is the third point in this list and suggested 2. And that way our total score is 14 out of 15. So anything above 12 or above, 12 or above in trending market. So we can accept a trade. And here it is a uptrend market. So we will plan for a long trade on this particular demand zone. That's it. The same way, you have to do a lot of exercises. First time or second time you take a little more time. Third time quickly you will give. Probably you will finish this whole thing in just a few minutes time. Maybe 3 minutes, not more than that. 4 minutes you won't take. Once you once you get a lot of comfortness, just in 1 minute you will finish everything. Quickly. It won't take time. Just by looking into the chart you will tell. Not even you put into the these values into the Excel sheet. In your mind itself you will calculate. Just looking into the chart. In 1 minute you will finish. Once you get some good practice. Here there nothing experience is required for doing these calculations. Only practice is required. That's why I am suggesting you practice. You may get sometimes for some stocks high score. For some stocks you may get low score. Low score, ignore them for your trading point of view. High score, anything about 12, you consider them for your trading. At present, you are doing paper trading. So consider. Because until the completion of our second price training program, you have to practice a lot by doing paper trading. Because we are about to, very soon, we are going to, probably the next 1 or 2 sessions, we are going to complete our phase 2 training program. So once by the time we complete phase 2, you should have a very good practice. You should check how many paper trades you did during this period. So almost it is a 2 months period. During this 2 months period, how many stocks you traded? How many got success? Earlier you didn't learn all these recent lessons. At the time, what was the success? When you are learning more and more concepts, when you are adding more and more checks. Now, when with the help of the most recent concepts, when you are trading, how much success rate you are getting, that kind of comparison you have to do. Earlier, your knowledge is limited, you learned few lessons, maybe their failure rate could be more. Now you learned all the advanced concepts. Because of these advanced lessons, they would have stopped taking wrong trades. Now, probably your success rate would have been increased. Especially after learning from price direction onwards. Because price direction, decision making table, all these made your trades very strict. So with these conditions, getting failure rate is less compared to the earlier. So that's why paper trading is very, very important for you people. If those people not doing paper trading, simply attending the lessons, it won't help you. Without getting experience, how do you get the money? Money won't come just like that. You have to practice. So this is about odds enhancers. So in the next session, we will discuss about the stop loss buffer, position size, and there is an indicator, ATR indicator, which will be helping you in identifying your stop loss buffers, how much buffer you need to keep. And the position size is very important, especially those who are going for cash trades. If the risk is high, still you can manage your trade with the help of position size. How you can do that? So all these concepts we will discuss in detail in our next lesson. Hope I wish this lesson is useful to you, and probably some of your doubts might have been cleared. But again, once again, I am clearly telling you, without completing price direction and decision making tables for bullish and bearish trade setup in lesson 14 or 15, whatever we land, without completing them, don't go through these sessions, odd enhancer score. And never ignore the important topics. I have observed whichever the lessons are most important, people are ignoring those lessons. Obviously, those people won't get success. You won't make good money if you do that. Okay. So if you are having any questions, please put them in the comment section. I will try to address. Now let us all meet again in our next lesson. Thank you.